to be in, unless you're from our side of the fence, which looks at Canada Revenue Agency and what they do to you. Real estate market goes up and down, your incomes go up and down, and so Revenue Canada hates that. They wish all of us were wage slaves and paid 50 cents on every dollar on our paycheck before we ever see the rest of it. A couple of years ago, we were made aware that CRA sent out 37,000 notices of reassessment, real estate agents. So that year and the following year, I talked to a lot of real estate agents who were in trouble with CRA. They were doing silly things. They were looking for logbooks. First tip, keep a logbook. How many of you do not? You never think about it. It's common. You're out there in the car all the day. You're looking at people, talking to people every day, looking at real estate. It's one of the things you don't think about. But unfortunately, CRA thinks you're a small business owner as a sole proprietorship. As a broker, you can be a corporation. So they treat you like that, even though you're in a people business. You're out there glad-handing, that you're good with people, your skills are such. Very often the paperwork gets caught up and snowballs behind you, and that's what CRA loves. The other thing was advertising. You'd think that'd be a no-brainer. You're advertising all the time, right? They want to make sure every piece of paper connected to that advertising expense. The problem with a little leader like that, or a lost leader we'll call it for CRA, is that it leads to something else. They walk in on an HST audit. They walk in on a logbook audit. And then they start going through everything. And all of a sudden you're looking for answers and excuses, and you're going down roads you really don't want to go down. And that's where FBC has learned to be different than your typical accounting firm. So this morning our talk is about tax tips and traps for small business owners, especially real estate sole proprietors. I've included those in your brochures. That information is all in there, and it leads to, hopefully, a discussion on the road. By all means, contact us. If you see anything in there that raises a question, ask right now. It's not a problem at all. But I want to show you how we are different than your typical accounting firm that you've been dealing with for the last number of years. FBC stands for Farm and Business Consultants. We started back in 1952 out of London, Ontario, and we started with the farm community for a particular reason. Our founder, Sam Ibbotson, recognized there were two things wrong when the average working citizen has to deal with Canada Revenue Agency. First, Revenue Canada is right under the law, always. After 60 years in business of challenging Revenue Canada, which is what we do, or CRA as they like to call themselves now, we found in fact that Revenue Canada is wrong as often as they're right. They need to be challenged. And that led to problem number 2, cost. You can have a $100,000 audit, and by the time you're finished with court costs, your lawyer that you've had to hire, your accountant that may or may not be with you, but if he is, he's charging you by the hour, you've wasted $100,000 trying to get it back. I go through this time and time again. The worst one I saw was right in my hometown of Peterborough, a trucking firm. $250,000. Revenue Canada was completely wrong. When I met this guy, he had just finished fighting them for 5 years and had finally been recognized as correct. The onus is all on him, the taxpayer. He said, Mike, I don't care if I'm right or wrong again. I never want to go through that process. It wasn't worth it. It should have written the check. And unfortunately, that's the advice we get out there now. Write the check, they won't bother you again. But that's no longer true. You may or may not know this. In 2004, Canada Revenue Agency, in conjunction with the government, because they recognized what a wonderful cash stream this was, they have a mandate on their website to audit every small and medium-sized business in Canada. It's no longer a suggestion to keep you a good paid citizen. No, it's a cash cow for the government. And that's changed their attitude completely. You will be audited. It's just a question of when now, not if. And that's on one of our slides here. So keep your heads up on that, because what I'm going to talk about today is how we protect you. Your biggest tax tip today is keep good records. If you can't do that, let us or someone else do it for you. Because if you don't have them, Revenue Canada has a field day. They charge penalties. They want minimum records. There's a standard set out there. And they go after you aggressively today. That's all changed since 2004. So we all pay too much tax in Canada. Some of us have been audited. If you have, you never want to go through it again unless it was a clean one, and that's very rare today. Filing late is a flag. You want a tax tip? Don't file late. A lot of people think, well, I don't owe any taxes, no problem. No, it's a flag directly. And with computers today, they're not missing it. So don't file late. Pay penalties for filing late or having your information incorrect or whatever. FBC is different. It's our responsibility to make sure you're filing on time, to make sure you don't have penalties. If there are penalties incurred because we're all human, we make a mistake, FBC will pay them, not you. That's a huge thing. Sometimes penalties are thousands of dollars. The whole thing is a pain in the neck. I understand that. I'm a classic example of it myself. If I didn't work for FBC, I'd be behind myself. I like getting out and seeing people. I like being in the car. I like going places, different places. I do not like sitting in front of a computer, playing with numbers, making sure they add up, when QuickBooks or Simply or something else like that can look after the math. But we all want to pay less tax. We're taxed to death in Canada. There's no doubt about it. It's actually killing the country. I don't know why more people aren't aware of that. But you cannot get ahead in this country paying 50 cents on every dollar. And then HST on top of that. People hate the HST in Ontario. They absolutely hate it. And we argue with the government for 2 years about this. You're going to drive small business underground. Guess what's happening? My dad is 91 on the 11th of April. Even he asks every tradesperson that walks into his front door, what's your best cash price? It happens. We are paying way too much tax. Who is FBC? The most comprehensive tax consultation firm in Canada. We alone, nobody else, has invested $20 million of our own money in a proprietary computer program called TaxGuard that looks at your tax return 40 to 60 different ways. Nobody else in Canada comes close. There's a reason we do that. QuickBooks, Simply Accounting, your typical accounting firm, they employ a cookie cutter computer, and it's the old 80-20 rule that James and I were talking about earlier. It's in your brochure. 20% of tax law is cut and dry. Well defined, clearly defined, it's related to the mathematics. Your typical accounting firm deals in that 20%. 4 or 5 years after study, they get a plaque, they hang it on the wall. 10 years ago or 20 years ago, it doesn't matter, that's the last time they're formally examined on what they know about tax law. During that time getting their degree, they get about 40 hours of the other 80% of tax law, interpretive tax law. That's where we make money for our clients. 80% of tax law, don't listen to Revenue Canada. It's interpretive. It's open to interpretation. And we make money for our members arguing with Revenue Canada in that section of the tax law. It's important to not roll over and pay them. You're acting like kids in a candy store. Your typical accountant, after 5 years, gets about 40 hours of interpretive tax law. Our certified tax consultants spend 7 years getting their degree, in addition to a CA or a CGA or a CMA, whatever else they have. By the time they've hit 5 years of study, they've already had 1,200 hours of interpretive tax law. It just makes sense. If you're arguing with Revenue Canada and you can back it up with tax statute, precedent, or history, you're in a much better position than just arguing one-on-one. It works. We are tax specialists. We've been in this business since 1952. The difference between the tax specialists is what we just discussed. What happens with your typical CA? They run up against the wall when they're out of their 20% comfort zone, and they refer you. If they want to try and take on what they think is a simple tax problem with Revenue Canada, you're paying them by the hour. If they don't do it, your lawyer's charging you by the hour. Very often they'll refer you away to somebody here in Toronto that's a specialist, so-called. There are no guarantees with these people, and they're very, very expensive. The good ones are few and far between. FBC is already a tax specialist firm. We will not refer you away. The important thing for you as a small business owner is it's included in your membership. There is no extra charge to fight Revenue Canada on your behalf, even if we go all the way to the Tax Court of Canada and pay the lawyers, the court costs, and our own accounting fees. If that happens to you once in 1 year or 3 times in 3 years, there's no additional charge.
Is this like an insurance to fight Revenue Canada?
I wish you could say it was, then we'd have a whole new field to play
But
on.
I'm just saying your program is like insurance.
It's like insurance, but unfortunately, because we're dealing with CRA, there are no guarantees. Some insurance companies can give you a guarantee. We give you a service guarantee. But sometimes you will not win against Revenue Canada for whatever reason. Yes, sir?
What was your record? What was the percentage you won and what was the percentage you won?
Let me put it this way. In the 50s and 60s, we had to go to court an awful lot with Revenue Canada. Today, it's handled by the telephone most of the time. We opened a new office in Barrie in October. And while we were there, one of our members got a phone call from CRA, and CRA was put on to us. London called us back at Barrie and said, CRA asked only 2 questions. Did we do the verification of income and expenses, which we always do, your typical accountant doesn't? And do they have the service guarantee? Will you take us to court if we disagree with your findings for your client? Yes, we will. Stop the audit. So it's an inaccurate number to say we win 90% of the time. We don't even get to court now 90% of the time. When it is an issue, it's a serious issue, we still win a lot. But I can't say we win 100%. Okay?
More than 50% in the court?
Let me give, sorry?
More than 50% in the court?
Much more, much more. Let me give you an example. In London, our head office is in London, we had a used car dealership. His audit was $114,000. That's a lot of money in a car dealership. By the time we finished with Revenue Canada, we'd gone to court twice on 2 appeals. We spent over 100 hours on this guy's personal tax return. We saved him probably $15,000 to $20,000 in accounting fees alone if he was with somebody else. Revenue Canada was wrong on 111,000 of the 114. He wrote a check for $3,000. As a used car dealership, it could have been the lost tax receipts for gas. It wasn't a big deal. That's the kind of thing we're able to do now, and we do it consistently and regularly. $20 million invested in our tax card system, we're not missing very much. All tax statutes, all precedents, our history for 60 years, and of course our membership is now over 50,000 across the country. So we have a lot to bear. Here's how it works. If you're arguing with Revenue Canada about your gas receipts on your car, you're arguing by yourself with Revenue Canada. But we might have 1,500 realtors in the area that are doing exactly the same thing. There's strength in numbers. We'll bring every one of them to bear in our argument. And it works. Revenue Canada is going after vulnerable people who don't have the deep pockets to fight them. Our membership concept means we all have the deep pockets of FBC, and we will fight them at every opportunity. Makes a big difference. Several of your colleagues were not, just picking numbers out of the air, were called a couple of years ago because of this audit mandate, this aggressiveness against real estate agents. And we got involved with a lot of things with real estate and CRA. Most of them turned out to be very favorable, simply because we had enough information and the strength of numbers. So it works. We are dedicated to helping small businesses like yourself minimize your taxes. You expect that. Unfortunately, that's not reality. Myself, I've been 2 or 3 businesses. I've gone through 3 accountants over that 25-year period or so. The last business was a very profitable one. thought it was a great business. Something happened, we lost it. Our accountants were useless, and we paid them huge dollars. They didn't want to get involved. They were not there to help us. They wanted $500 every time I made a phone call, and everything was itemized, faxes, blah, 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 blah. It was horrible. Your typical accountant is taking your information, plugging it in, and sending it to Revenue Canada and hoping everything's okay. Because if it isn't, they don't want to get involved. That's the reality. They don't have the business model set up like we do to handle that kind of thing. So you're not really getting minimized taxes. Maximized tax credits. If we're looking at your tax return 40 to 60 different ways, you're not missing your tax credits. That's a huge tip. Most people are losing thousands of dollars a year in tax credits. They don't even know it. Our computer at 40 to 60 different ways runs 40 to 60 different tax returns, isn't missing those tax credits. Money in your pocket every year. And finally is the big one. How many of you have accountants that have talked to you about the advantage of a will to protect your business assets? Everybody talk about wills? You all know about the will? Did you know it doesn't mean a thing? You knew that, eh?
Well, yeah, sure.
8 out of 10 people I talk to have never, ever been told by their accountant, their lawyer, their financial planner, their banker, or anybody that when it comes to business assets, the will means nothing. Section of Tax Act goes something like this. In the event of your death, the Income Tax Act says all your business assets are deemed to be sold at fair market value at your time of passing. And Revenue Canada wants to be paid first in priority above everybody else, and the kicker, regardless of any bequest in your will. You're all sole proprietors unless you're brokers. That's huge. So you're building up assets, you're doing wonderful with your business, you've got a great client base, you've got a beautiful home, whatever. In Revenue Canada, because you're sole proprietor, that means you're the business is you, can walk into that gray area and make it all money. And say, nope, these are all business assets and we want the tax. And if you don't have it set up properly in an estate plan using trusts, etc., so those business assets are identified, you will lose. And your estate will pay Canada Revenue Agency. And your family will get much less than you expected. We run into this all the time. Our mandate is to keep CRA out of your pocket. So we do this kind of stuff, included in your membership. There's no additional charge. That's huge. You talk to your lawyer about setting up an estate plan, it can be thousands of dollars. The preferred alternative to the traditional accounting approach, we are specialists. We work proactively using TaxGuard to put more money in your pocket. We never sit back and wait. I don't know how many business people I talk to, they don't even know about the WSIB changes this year if you're a contractor. Started in January, it affects everybody in the contracting business. Half of them haven't heard about it. HST, what's Revenue Canada's solution to driving the economy underground? They hired 1,000 more auditors for HST. Isn't that helpful? They hope you're making mistakes. But we make life less taxing and we guarantee our tax solutions. That's the word guarantee that you read. What that means is we're right. And we will go to the MAC, the CRA, tax court, whatever, to prove it. Every once in a while you make a small mistake and it costs a bit. But most of the time it doesn't. It does not come out of your pocket. 1945, the Income Tax Act was only 43 pages. Your tax return was only about 3. You all know where it's gone from there, and because it's a cash cow for the government, it's only going to get worse, not better. This is huge. I defy any accountant in the room to tell me they know 3,400 pages of the Tax Act. We're all human, we don't. So what's been happening? The exact opposite of what you want. Tax tip. Do not go to the Revenue Canada website for an answer. It's like talking about the fox and the chicken house. You're talking to the wrong guy. 80% of tax law is interpretive. You need somebody to go to that will argue your case. This is a big thing. 3,400 pages. Your typical accounting firm is not on it. I am hearing the worst thing. I put all my information on a diskette or whatever, and I just give it to my accountant, and he plugs in the numbers. It's great if you don't have a problem. The thing is, though, if Revenue Canada has an issue with you, they're talking to you, not the accountant. He signed off on it. He just took your information. We don't do that. We verify it. Make sure that you're telling us is accurate so that we can defend you. 3,400 pages. It's changing every year. That number's outdated already since WSIB kicked in January. Which means if your accountant firm is not on top of this and not keeping up to date and making you aware of the changes every year, you're missing stuff, which is money out of our pockets. So our guys as certified tax consultants, and I'm at the age where I wish my doctor was certified. I wish everybody I talked to was certified. I mentioned earlier, your accountant got his degree and threw it on the wall, and that was it. What, 10 years, 20 years, whatever. He's never been formally challenged on what he knows or doesn't know. As certified tax consultants, our people are brought into the regional offices every fall, and they go back to school. They're updated on the Income Tax Act, all the changes. They're updated on our computer system, TaxGuard. How's it coping with these changes? And then how does it impact our members? And then they write a formal exam. Isn't that nice? If they get 80% or better every single year, and in my territory, I have one of our consultants who's been with us over 35 years. He goes in every single year, gets 80% or better before he goes back into the field. If he doesn't, or anybody else, they stay in school till they get what they've missed. In Toronto, you have a new procedure here for men's prostate cancer. And I hate to tell you this, but all my friends have this problem. It's called HIFU, high intensity focused ultrasound. My doctor doesn't have a clue about it. She's not certified, and it's right here in Toronto. My buddy paid $22,000 out of his own pocket to try it. He's been clean for 12 months. Non-invasive, in and out. Every accountant should be certified, so they're up to date and you're not losing money, in my humble opinion. The government has a mindset that because you and I are making money, we're the real engine of progress, the real engine of work in this country, we can afford to pay them. It's a long, long, long away from prior to World War I, when it was a temporary War Measures Act to take money out of our working pockets. They helped the war effort. There are people in jail right now still disputing the government's right to take this money out of our pockets. But they have run away, run amok, and now they're taking well over 50 cents out of every dollar. The tax man is coming. Tip. It's not if, but when. In 2001, prior to 2004, 16% of small businesses were audited. By 2005, just 1 year later, that had jumped to 21%. Today, they're still averaging between 300 and 500,000 small and medium-sized businesses every single year. The worst year I've seen recently was over $9.5 billion they took out of our pockets in 2007. Half that money should have stayed with us just by challenging CRA. They're that wrong that often. But we're rolling over and paying it. We shouldn't be. Data entry. That's what your typical accountant is doing. And that's 20% of the Tax Act. That's all it is. We, after 60 years, have realized that you need to take a much broader approach to the Tax Act and the tax situation. If you don't, you are definitely leaving the back door open for Revenue Canada to walk in and bite. We're saying keep good records. We are also really saying, as your top tax tip, hire somebody like FBC who works with you to make sure you don't run into these very costly, very stressful and time-consuming issues with CRA. We're all going to run into it one way or another. Under planning, the first thing we'll do is a 3-year review. This is important. We want to establish your pattern of paying Revenue Canada. When we do this, we often find outright errors that we'll amend right there. We'll also find credits that have been missed. That's important because it's money right out of your pocket. So when you have a good year, you want those credits to be able to reduce your income and not pay through the nose. I have a real estate agent near my town that got very bad advice on a tax shelter. Dipped his toe in the water 1 year, put 20 grand into it. Second year, it worked great, put 20 grand into it. The third year, he said, well, let's go whole hog, put $40,000 into it. The fifth year, fourth year, Revenue Canada denied it all. Where do you think his position is today? And I told him, point blank, your advice was wrong. You'll not win this. Pay them now and avoid future penalties, or we'll be together in 5 more years and you'll owe them 10 times this amount. There are some things you cannot win. When we do a planning process, we set up 1 to 5 year tax goals. So tax tip, you're now not going year to year, you're going 1, 3 to 5 years out. You will have financial statements, even as sole proprietors. We provide those, your snapshot of your business every year. So you know every year whether you're going ahead, falling back, moving sideways. You need to know these things. If you don't have a snapshot, you don't know what you've done. You might get an income statement and a balance sheet from a typical CRA firm. It's not good enough. So we'll provide the financial statements, no additional charge, so you know, and we know, where you're going every year. Almost guaranteeing your success if you look at it that way, from a business and tax perspective. Why is this also important? Revenue Canada has a very self-serving suggestion on their website. How many here have heard, keep your tax information for 6 to 7 years before throwing anything out? Everybody hears that, right? It's totally wrong. There is no tax statute of limitations in Canada. Anybody hear that? Accountants don't tell you that. Why? It's a self-serving suggestion by CRA. If you're waffling in the breeze, trying to remember what happened 8 years ago, and they want to look at 8 years ago, and you've thrown everything out, you're all on your own. Good luck. Except, obvious, right? If you're a member of FBC. We'll do something that nobody else will do. When we've completed this review process, we will now protect you as far back as Revenue Canada wants to go, even though we haven't done those tax returns at no additional charge. Peace of mind. Everybody wonders what's coming out of the woodwork. Have I done it right? I made a lot of money 4 years ago. Are they ever going to come back? You betcha. Sometime. Do you want to be paying your accountant now that may or may not have had that experience filing your tax returns 5 or 8 years ago? In fact, there are some pieces of information when you're selling a business, etc., that you need to keep indefinitely, is the word from CRA. I'm always telling you these things. So you're flapping in the breeze. What do you do if Revenue Canada says, you were wrong 7, 8, 10 years ago? You owe us $20,000 plus interest. It's $50,000 bucks. But we'll saw it off because nobody knew, nobody told you. Just pay us the 20. How many people say, thank God, and write the check? But Revenue Canada is wrong as often as they're right. They should be challenged on that. Penalties are gone anyway if you challenge that. Important to know. Pillar number 2 is preparation. This is kind of goes without saying. You need to have good records. You need to have them readily available. They need to be available to CRA in a format that they accept. We help you with all of that. And we make sure that the numbers are correct through our source and application of funds. Where did all the money come from? Where did it all go? We don't take your word for it. If you want us to take your word for it and not do the verification process, then our service guarantee is invalid and we give you your money back and say thank you very much. This is critical stuff because your accountant's not doing this. We do what Revenue Canada calls or refers to as a net worth audit. They know we do the similar thing to them, so that's why our service guarantee has weight. We've done it for 60 years. The other part of preparation, of course, is data entry. That's the 20%. We'll make sure it's right. That's why we've invested so much money in our computer system. It's usually right. So does QuickBooks and Source or Simply Accounting and these other kinds of things. We have our own program for you if you like. It's no charge for it, but it's not obligation. You can use whatever you want to get the numbers. We just verify them. But that's a big difference. Your data entry is the 20% your CRA is doing, or whatever. Consultation is self-explanatory. We were actually intimidated when we were going through our business problem in Brampton because our accountants were so expensive. We thought, what the hell? Let's just close the doors and walk away. Your first loss is your least loss. We can't argue with Honda anyway, so let's just walk. And we did. Put 35 people out of work, including ourselves. It was terrible. I was in a business that I really loved. I love toys. Motorcycles, ATVs, I love that kind of stuff. I had a great time. But our consultation from our accountants was non-existent. And every time we did ask a question, it was a hassle to get to the guy who had the answers, and it was $500 an hour. Everything was itemized, just like talking to a lawyer. I hated it. I felt like we were getting kicked when we were already down and we were really looking for ways out. Our consulting team, that's what they do. They work with you to ensure your success going forward. They're available to you every day as often as required, by phone, by email, or personal visit, depending on what the situation is, at no extra charge. We limit our consultants to 100 to 125 members in their area. Then we bring, as we grow, another member or another consultant into the area for the next 100, 125. Under our business model, that's all they can handle. So if you're proud of your accountant because they have 10,000 clients, don't be so proud. They're not really dealing with you. That's the reality. Buying or leasing. When I was in your business or like something similar to your business, I always questioned this. I still don't know if I'm right. Sale or purchase of assets and estate planning. Why do we do estate planning to keep Revenue Canada out of your affairs? Other than that will thing we talked about. Nobody?
Keep our assets, make sure that we have money when we retire, I guess.
Yeah. Your assets, if they're owned by you, can be seized by CRA. And that's it in a nutshell. So you can't own them. If Revenue Canada has an issue, they have under the law an issue with you, not your accountant. But we override that with our service guarantee. They have an issue with us. And all your assets we will look at from an estate planning to put into trusts. And the reason for that, trusts you own notionally, not actually. Trust assets you have care and control over, but you don't own them anymore. So when I was in the bank and loans in the 70s and 80s, if CRA walked in the door and they wanted to seize your RSPs, it didn't matter whether they were registered or not. They got them. They were in your name. If they were in a trust vehicle, I could send them packing and notify you that CRA is on the warpath for you. Huge difference. Night and day. Timing is everything. But your trust walls cannot be penetrated right now by Canada Revenue Agency or any other creditor for that matter. So you guys have incomes that go up and down. You have great years, you have poor years. Sometimes your assets become at risk. One of the first things I learned the hard way is don't pay off your house. Everybody says pay off your house. Don't pay your house off. It's the biggest plum that most of us as working Canadians have. And it's sitting there for anybody to grab. Always put a line of credit against it, max it right up. Even if you're not borrowing it. Even if you're not utilizing or drawing down that line of credit. It's on the house. Revenue Canada will walk away from a minimal equity. Because on paper, you borrowed. How many people heard that? You're in the business.
Heard it.
Yeah.
Didn't know it was true.
It's very, very true. They will slap a mechanic's lien or a sheriff's certificate against your house first, without even thinking if there's no money in the bank account first. You don't even know about it. Nobody notifies you until you go do a property search or something. Wouldn't that be disappointing? Revenue Canada's got 80,000. I'm still arguing with these people. But yeah, they got a sheriff's certificate against your house for 80 grand. Nice. That's why we do estate planning. The value, we don't charge for. It's part of our mandate. Saves you thousands of dollars and more when it comes to the assets we're describing. Finally is protection. I won't belabor this because that's the big thing with Revenue Canada right now in the CRA. The biggest tax tip here and tax trap is that it's not a fair playing field or a level playing field. Revenue Canada is changing the rules every year. They are targeting areas, sections of our workforce every year. Real estate comes up regularly. Every 2 or 3 years, they go after real estate agents because of your income's up and down and all this sort of thing. And because, I hate to say it, but you're easy targets. You're more apt to pay them and move on, get it behind you, than fight them. Don't do that. If you're with FBC, we'll fight them for you. If it's not costing extra money, nothing to lose. Charge. In an audit or a reassessment, anything from CRA, if you're an FBC member, just call us. We'll look after it from there. I have 2, 3 real estate agents that I personally am involved with that have gone through some horrible situations. The one guy is telling everybody in Lindsay, everybody, deal with FBC because his first audit he wasn't with us. And it cost him a fortune and a marriage. His second audit, he was with us. The auditor was in his office for 5 minutes with our consultant, turned around and left. Very, very different. And that's no joke, that's routine. So it works. With everyone else, basically, Murphy's Law, just half a second. There. With everyone else, this is really what you're getting. So the biggest tip of all is make sure your accountant is prepared to work with you for more than just data entry. If you go out of here today and call your accountant because you haven't filed yet, you'll be shocked. There's no doubt in my mind at how much your accountant is actually doing for you. We work under presumptions when we work with professionals. That's why I wish we all had certifications. It makes a big, big difference. We've seen it happen left, right, and center. In my business, you used to come in, you had a toy to get fixed, and we told you it was $100 or $200 bucks. It turned out to be $1,000, and we said, sorry, that's what we've run into. And if you want your machine back, pay $1,000 bucks. Well, they slapped our industry upside the head, didn't they? Now, if it's $200 we quote, it's $200 and we eat it if we haven't contacted you to get your permission to go ahead and spend $1,000 fixing your machine. We'll give it back to you in parts if necessary, but we'll give it back to you. Same thing should be happening in the accounting business. Absolutely. Okay. With all the benefits that FBC offers, no other tax preparation firm can offer all this stuff. The last question really becomes a little series. In your brochures, we've identified 8 top tips, top ways, 8 to 1, what you should be looking at with your accountant. We've also, instead of going to the website, I've printed it and put it in there for you too. The top 6 audit triggers. Valuable experience from coming in today just to grab that stuff. And then with what we've talked about, it really makes sense to give us a call, or my assistant will call you and see if there's something worth sitting down and talking about here. I will bet we've uncovered a few things today that you have never heard from your accountant before, and it saves you a ton of dough. Am I right? Okay. How's our time, Nilo?
We're good.
We're just about done. 45 minutes. You said an hour. We're laughing. Any questions? No? We've had a couple.
Oh yeah, for sure. You say certified
Yes.
a lot?
Yes.
With who?
The University of Athabasca and FBC. That's University of Athabasca with us.
Oh,
A lot of our operations is now in Calgary.
publish data for the statistic, how much percentage of relatively audited?
Yes, if you take a look at our website, there's all kinds of information there on that type of thing. So real estate was really hammered about 2 years ago with those notices. In fact, today, we're still getting phone calls from people who have gone through that experience saying you've got to talk to John Doe or Jane or whoever that's in the industry because they're going through the problems too. I used to be able to stand up and say, how many here have your notices of reassessment from Revenue Canada for your logbook? And about 8 hands would go up. It was that wild 2 years ago. So, did you all learn about the logbook thing then?
No.
Nobody say anything? They'll nail you to the wall because what they'll say is, if you don't have the logbook in place and you don't have the backup in place to justify your expenses, we're going to take the higher level. We're going to say no. So that's why we verify everything to make sure. Just on that note too, Revenue Canada is not playing around about these audits. I know I've hammered a bit on that, but you should know it. They're now going the next step, and they're looking for indirect verification of your income. Do you know what that means? They're calling your colleagues. They're calling other people in the industry. They're looking at historical records now, and the computers are helping them with all this. It's kind of a two-edged sword, the beauty of a computer, right? They're not missing it. So if John Doe in your office has about the same sales and is only claiming X number of dollars and you're claiming much lower, you're going to get audited. This is called IVI, Indirect Verification of Income, and it's new, relatively new. And every auditor, I know my own experience, we have 6 in the Peterborough area. You can ask each of these 6 auditors one question, you will get 6 different answers. And not one of them will put anything in writing, not even your boss. You try. So you're really playing against the stacked deck.
Why isn't the will about it?
The will is not recognized under the Tax Act for a business. You're a sole proprietor as a business. They don't look at the will. They get paid first. The problem with that statement too as a sole proprietor is fair market value. If it's not put down, it's not recognized in the paperwork, they'll determine the fair market value for it. And you're not around to argue, so your state will pay whatever they say. There are several little things in that section, that little quote. I see it like this. You have a vehicle. Let's say you have a Cadillac, for want of a word. It's a nice car. You've written it off. 5 years later, it's worth 0. Revenue Canada comes in and says, oh, jeepers, they kept that like new. It's still worth $35,000. We want the tax on it because it was a company car. Your estate will pay the tax on that car. They won't fight it. And whatever's left over goes to whoever you want it to get. In bigger dollars, it can be a lot of money. I have a gal out west that's with us. She was fabulous. Her audit, Revenue Canada wanted $500,000, 400 and some thousand dollars capital gains, and another $40,000 in alternative minimum tax, which, as you guys all know, was triggered by that capital gain. Her accountants at the time said, Revenue Canada's probably right, go ahead and pay it. She was furious. Over $500,000. She came to us, we ran her through our tax guard system, and very quickly identified when he had died, the date of demise, the final return was done incorrectly. We simply amended the tax returns. She didn't pay a nickel in capital gains, nothing in alternative minimum tax because capital gains gone now. And icing on the cake, we found $11,000 in tax credits that have been overlooked completely by her accountants. Those are big dollars.
How far back do you go on this credit?
It depends. You can go back. You can bring tax credits forward forever. So we'll go back as far as we can to identify them. You can actually amend outright errors, though, only 2 years. So if there's been a mistake and you've paid it and we identified it was 5 years ago, all we can do is bring it to Revenue Canada's attention, but we can't make any changes.
The protection of the assets, is that like a limited company?
Corporations are the first step. If you're a broker, you can be corporated, right? They haven't changed that yet, so the sole proprietor is not available to you. There are a lot of sole proprietors and partnerships out there. But Yeah, your assets have to be clearly identified, and then the best protection is a trust wall. So even in a corporation, because they've changed corps now. When I was in the bank years ago, a corporation you could buy for a few $100s. It was a separate entity, and for tax law, it still is. You're actually paying 2 tax returns, and yourself and the corp.
Yeah.
But reality, the lawyers don't care. They use what they call a shotgun approach. They sue everybody and see what happens. So the corporation doesn't provide the protection it used to do.
Yeah.
The other thing a corp used to do, as a separate entity, you could walk in, if it was a good company and it was making money, you could borrow at the bank in the corporation name. What do they want now? Personal guarantees on everything. So the corp isn't what it used to be, and that's why we've gone the next step with the trust, because right now, they can't penetrate the trust wall because you don't own that asset. So if you're a corporation, it's nice to have a third holding company that's just loaded to the gills with trust walls, right? All the liabilities are over here on the operating company, but there are no assets in it.
Yeah.
And the lawyers can't break that either.
So basically, be poor,
On paper.
but yeah.
Yeah,
And
exactly. Have everything federated
Trust.
through your trust. Yeah. The other thing too you should be aware of is that trusts are amazing vehicles, but we don't know how long they're going to last like they are. You saw the lawyer on the news the other day, right? He was all identified as having an offshore trust. His wife is a senator in Canada. She's not supposed to have any signing authority or anything on any trust anywhere in the world. It's a big hoopla, just like we had in Switzerland, right? Everybody was, oh my God, we know all these people. Anybody hear anything more about that?
No.
No. Haven't heard this lawyer's name again either, have we? You know why? Okay, you got me. Here I am. You know who I am. So what? The laws are so strict, they'll never get at those assets inside the trust and the offshore. You'll never get near them. They can threaten Switzerland. They can threaten any place.
Yeah.
Those people make a living from offshore trusts. Now, I'm not a lawyer, but one of your colleagues has a corporate lawyer right in their office. When we put this presentation on, she wanted to sign up. She was very instrumental helping us. It was terrific. And she backed us up on the trust thing. The only problem is, she also has a trust for her business. And these audited statements at about 20 to 30 grand a year. It's too rich. But it works.
Yeah.
Good questions, guys. Appreciate it. Any more? No? Anybody else? You're all good? Not yet, Nilo. We don't. And the reason is we always come to our members. We don't ask you to gather paperwork up and take it and drop it off at our offices like it's typical. What's wrong with that, it's not confidential to start with. Just like software on your programs for, QuickBooks or anything Simply Accounting. It's all software. So if you have a software problem, you have to bring a third party in and fix it. We bypass that with our cashews program, which is cloud-based and it's all internalized. So confidentiality is a big thing. We always come to you. The other one's more obvious. If your accountant's actually walking into your office and to get the paperwork and everything, they see what you're doing. There's an obvious opportunity to make suggestions on saving tax. Oh, are you using the office for business write-offs? Are you considering the capital cost allowance down the road when you want to sell this principal residence? Blah, 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 blah. It goes on and on and on. And we found that our guys know our clients much, much better than the accountants that I know as friends who hardly know me at all. And I've known them for years because they don't know my business or what I do. It's pretty funny, when you talk to an accountant over a golf course, you shoot the breeze, and all of a sudden you find out what you actually do. We don't do that. No, I don't. So those are the two things. Now, we do have regional offices. Every time we grow, I said we just opened one in Barrie, and our next one is targeted for Oshawa, Peterborough, hopefully. But that's really where our team of specialists are, and the computer programs. They're all interlinked across the country. So if anything's happening out west, we know about it in Ontario and vice versa. And when you're talking to 50,000 plus members, you don't want to miss any if there's a tax thing that they need to know about. So it's all interconnected. But we found it's a much better model to actually go to the place of business, wherever the records are kept. And I know in my business, we grew from $6 to $8 million in gross sales in 4 years. We had 35 on staff. We had an on-board accountant, bookkeeper too. And they would always pile all this stuff up and take it down to the accountant and drop it. And then 2, 3, 4 weeks later, maybe longer, it would come back to us with a bill. You know, to be perfectly frank, I couldn't tell you how much went down there, and I couldn't tell you if everything came back. I just know my accountant in the shop is always looking for papers. I hate that. So it's all organized, it's where you keep it, we put it into the computer, bring everything forward, and then leave the paperwork there. The only time you lend us your paperwork is at sign up for the first time when we do the 3-year review. You'll lend us your tax statements, any reassessments, so that we can do that review, then we bring them back and tell you what the results of the review are. That's our first meeting. And then you get introduced to your estate planner, your consultants, et cetera, ongoing. And I always act as the liaison for the first year or two until you're established a relationship. Sometimes you'll not have the right chemistry with your accountant, sometimes you'll need to change that out, or we're missing something. The estate planning, they made one phone call and they didn't follow up, but your circumstances have changed. I have a really funny one like that. We had mom and dad, 2 businesses, 2 growing sons and a growing daughter, all in the business. Mom and dad wanted to be like me now, a new grandparent. They wanted to have grandparents, be grandparents, have a lot of fun. So their accountant was trying to do the estate plan, 18 months, and he really hadn't gotten away from the gate. Because there's a lot of interest in 2 businesses in these kids. They're all adults. So we sat down with them, and the first thing we did after the review was find out they were not receiving their income in a tax-advantaged way. So I walked in and I sat down and showed them the letter, and I said, "Isn't this terrific? You're getting 10 grand back." And they said, "Yeah, this is great. We were glad we're with FBC." They didn't know that it meant 10 grand this year and every year going forward. Now they can't wait. I've got them on their screen, as a matter of fact, and telling everybody, we've literally saved them hundreds of thousands of dollars going forward, because it's at least 10 grand every year. So those are the kinds of things you don't know that your client doesn't know until you're sitting down face to face in their house with all the kids around the table, and then they realize, holy cow, these are happy grandparents now. Yes, Jade?
Yeah, I think it's interesting that you mentioned to be organized. It's important because the more information and records you have, the better you can fight CRA. And
That's right.
there was a colleague about 10 years ago, I met him, real estate agent, very successful, and because of audit actually went out of business. He was audited for $18,000.
Right.
And most of those bills are restaurant bills that he took his clients.
Yes.
Now,
Big one. That's a big one.
CRA argues that on each of those bills you have to write your client's name, so that you have a track record of who went and why they went.
That's
Who
right.
went and why.
Yeah.
So you cannot just show bills and receipts from a restaurant and claim that this was a business meeting.
No, you
have
better
to
have
do-
something there. Yeah.
That's right. So that's a good example of keeping the track records of what you do and the notes.
Now, your computer systems allow you to do that. A lot of times on your diary systems, right, you plug in John Doe, I'm going for lunch at such and such, and blah, 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 and then you've got the receipt to connect with that. That's great. However, guess what CRA wants? They don't care about your credit card statements, your bank statements, or anything. They don't want to see all that stuff. But in the final analysis, they want the piece of paper. Good point. That's something that's going with good records. And of course, your consultant will sit down and make sure that all those areas are covered. So you're not missing that. If you don't have that piece of paper, you're flapping in the breeze. And that's why it's so important to keep your documents going back 7, 8, 10 years, as long as you've been in business if possible. Because if you don't have a piece of paper, you're done. You're just arguing. And if you're arguing on your own, you're probably going to lose. You'll end up paying. But if you're arguing with the strength of an FBC, then you may win. Because we've got so much precedent and we've got so many members doing the same thing across the country. Good point. I think we mentioned that keep good records, that's right, isn't that? Well, yeah, it is good. Anything else?
Yeah, can you talk about the log?
The logbook, yes. It doesn't have to be too fancy. We can provide them, we do provide them for you, as a matter of fact. Because in our industry, a lot of people write off their expenses for cars and travel, etc. I never go to Florida without an educational thing to it. You need to know these things. A logbook doesn't have to be very fancy, though. Mine is very simple. every date, when it comes out, where I went, who I saw, and at the end of the day, write off the place.
Oh, yeah.
All my oil changes, I keep all my receipts, etc. But there's a standard format for that. You can do it computerized and generate it. I just found this out. If you put all your paperwork into a computer,
Or like
And
PDF
then-
or something?
yeah, and then print it off, don't destroy them.
Oh,
They're not part of the destructive thing that CRA says is okay to do.
that's in law now though, isn't it?
Yeah.
Like they wanna make it PDF?
Yeah.
Like,
But don't destroy the paper record. Not part of that destructive thing. Interesting, huh?
So if you keep your paperwork,
Yeah.
the original receipt from the gas station or whatever.
Yes.
And like my log, I keep it in Excel. I
Mhm.
just in Excel and I itemize a whole bunch
Yeah.
of stuff in monthly and then
And you can print that
staple
off.
them at the end of the month.
Yeah,
and
that's
keep them
fine,
in.
that's fine, and especially if you have a space there in Excel, to tell what client you saw and all that sort of, which is James' point.
Oh, yes,
Absolutely,
yeah.
yeah, that's no problem, that works fine. But we do have what we call a, minimum records, make sure that you're in compliance. Planning is all about compliance with CRA, and we do provide that logbook for you, which is very straightforward, and it satisfies CRA. We provide that, again, free of charge. Keep good track on your advertising expenses, make sure there's a direct connection between what you're spending there and what you're doing in your business. If you don't, they'll examine all that, and they'll always say, no, we don't buy that, we don't, we don't believe you.
Yeah.
And unfortunately, that's all they have to say to go back as far as they want. I have one guy, it's no idle boast, I have one guy that has 3 corporations in Peterborough, and he's a bit of an inventor, he's very brilliant. But he's been fighting with Revenue Canada for over 20 years. And his final answer was, he's still fighting with them. His final answer was to close that company down and put out, I forget, 50 people out of work. They do not care. There's no rhyme or reason. The one thing they're told, A, go get money, and B, you're always right. Let the client, let the taxpayer prove otherwise. That's not a really fair playing field. So call that. Good question.
You mentioned gas expenses, so if I didn't get a receipt, the credit cards, debit cards?
Yeah, credit cards, receipts you're talking about?
Yeah.
Yeah, unfortunately, some of them turn white after 3 years. They all fade. So yeah, keep your records, but try and keep the receipts, the actual receipts, because they won't just look at records and buy it.
Okay, so what's the difference of receipts and the credit card statement? Still say in gas station.
Yeah, it does, but they can argue whether it was for business or whether it was for this or how much or was it your car. They can do all kinds of things. And remember, because they're always right, you're beating your head against the wall. You could be totally right, but unless you can prove them wrong, they are able to charge you.
The more notes you have, the better it is on your paper.
Yeah, although it's like you trying to argue with CRA. They play good cop, bad cop. They very definitely want to get you angry or antagonistic or whatever so that you say things that you don't really mean. So time and time again, my advice there is please don't get into a discussion with your representative from CRA. Tell them you're an FBC client, we'll contact you. That's the safest because our guys do not get angry. They really don't. We've been through this so many hundreds and thousands of times. We know what to ask and what to answer and what not to answer, more importantly. Okay? And we've got the backup of 50,000 coast to coast practically, so it's important.
You mentioned also membership. So,
Yes.
so how FBC is charged by membership? Or
Yeah, we're a
by-
membership
oh,
concept.
okay.
Yeah. You retain FBC services at the beginning of every tax year. You don't pay for your taxes at the end of the year because there's so much we have to do. The reason for that model, 2 reasons. But in the early 50s and 60s, we had to go to court a lot. We don't have an accounts receivable department. If we went to court on somebody, they weren't happy with the turnout, and we've spent $20,000 in those days, that's a lot of money. And then they said, I'm not happy, cancel your check sort of thing, right? We didn't do that. We don't have an accounts receivable. You're either a member in good standing with us or you're not. If you're a member in good standing, everything applies. We go to bat for you. We bend over backwards. Membership's very important. I'll show you an example of that. Your typical accounting firm gets a fee structure in place, and that's it. As you grow, that fee structure grows up, right? I've never seen one go down, except here. And it was membership driven. The members said, okay, if we have to pay more on the way up, fine. But when we have a bad year, we don't expect to pay the same or more. We drop our fees, believe it or not. It's all based on that model of just how much gross sales and what your business model is. Because court was more expensive than a sole proprietorship. I think that's fair, and I have never had an accounting firm do that. I've never had an accounting firm be proactive like these guys either. In the early 80s, when they didn't accept husband and wife partners, we fought Revenue Canada on that at FBC and won. We amended our members' tax returns across the country and put over $20 million back in their pockets that first year of amendment. In 25 years, 3 accounting firms, I've never had an accountant call me and say, Mike, guess what? We'd like to amend your tax return and put 10 grand back in. Because they don't have the ability to do that. Only FBC with their connectedness all across the country and that tax card system. It's a huge system. It's worth its weight in gold now. So, very good questions, Neil. Are we out of time?
Yes, thank you so much.
My pleasure. Thank you very much. Take care, everybody. So if you have questions, there's information, contact information in that flyer there. And my assistant will probably be calling you anyway.